October sucked pretty bad for crypto. What was supposed to be Uptober turned into Wrecktober, one of the most disappointing months in crypto history in terms of being in October, which is usually bullish. For the first time, the October after a Bitcoin halving year closed negative. But maybe we've been watching the wrong charts, because right now the S&P 500 is pressing against a resistance line that's been in place since 1930. Either we're set for a massive rejection or a wild bull market that nobody really sees coming. Because if we break it, we can see a historic bull run across stocks, and God, at some point the liquidity's got to flow into crypto, right? Right, guys. But fail here and things could get real rough real quick for stocks, and probably really, really bad for crypto. Either way, this moment could define the next decade of markets. So stick around, we're gonna break it all down. First off, shout out to Mel Madison for sharing this incredible 100-year chart on the S&P 500 over on X. It takes us all the way back to the 1920s, long before World War II, long before Bitcoin, long before we were here, and even before anyone imagined artificial intelligence except the wildest sci-fi writers. What we're seeing here is the S&P 500 pressing against the top of a century-long ascending channel. If it manages to break out and to hold above that line, well, it could mark the beginning of what might be remembered as the bull run of the century, which probably then lead to the collapse of the century a few years later, but that's a later us problem. Now, as with any test of resistance, it can go one of two ways. Whether you get rejected here brutally, savagely, disgustingly, and everybody starts praying for a bag just to go back to break even. Or a breakout happens that proves every bear wrong. We won't know until after it happens. That's the tricky part. Lay your money on the table and decide which way you want to go. But we can look at a few macro factors for hints to see what's going on here. So what could actually push this century-long channel to the upside? Think about what really drives markets. Good news, okay? It's that simple. When a major stock posts strong results, that optimism spreads, people get rich, they sell that stock, they buy lower cap stocks, everything starts pumping up. One company's success can lift an entire sector. Look at Nvidia, and sometimes the whole market follows. It's the biggest name on the stage. It's a $5 trillion company, the undisputed poster child of the AI revolution, literally powering the chips that make artificial intelligence even possible. Nvidia recently became the first company in history to hit a $5 trillion valuation, which is just bonkers, crazy zone, man. The valuation of Nvidia is bigger than most countries. Like half the people who work at Nvidia are millionaires worth like $10-20 million because they got stocks early in the days. For perspective, okay, $5 trillion is larger than the GDP of Japan or Germany. GDP versus market cap's not a great comparison, but you get the idea. Here's where it gets interesting. Nvidia is set to release its earnings report on November 19th, and according to Goldman Sachs, expectations are sky high. They're calling for what they described as a beat and raise quarter, backed by strong data center revenues and accelerating AI demand. At the time of this recording, Nvidia's stock trades around $200, with Goldman Sachs target a whopping $240. Another 20% to the upside from here. It's crazy, man. And I know what you're thinking. That ain't dog coin money, man. 20%, what is this? But for $1 trillion, $5 trillion stock, that's a serious move. And Nvidia isn't alone. Other major players, Palantir, AMD, Uber, Qualcomm are all releasing earnings this week. If these names meet or beat expectations, well, the bullish sentiment in the stock market could easily spill over into the broader market for stocks and keep everything chugging along, potentially giving the S&P 500 the exact fuel that it needs to break into another round of price discovery, which November and December are usually the best months of the year for the stock market. But Lark, that's not even our biggest problem right now. Donald Trump's 4D chess is wreaking havoc on the markets, man. It's true. It's true. The Don in China. But there is hope, because Trump and Xi Jinping's recent meeting in South Korea looked pretty good. Reportedly has yielded some pretty big breakthroughs here. In their summit in Busan, South Korea, the United States agreed to reduce tariffs on Chinese goods from around 57 to 47%. And they removed the threat, of course, that extra 100% tariffs, including halving the fentanyl-related tariffs from 20 to 10%. And in exchange for that, Beijing's going to be cracking down on the flow of fentanyl, the best that they can, I guess. Very interesting. China, in turn, pledged to resume large-scale soybean purchases. I know what you're thinking. My dog coin's been waiting for the soybean purchases to start back up. I know. Anyway, it's just part of the deal. It means that good negotiations are going on, good things are happening. And there will also be a pause in new rare earth export controls, which is the real big thing, not the soybeans, right? This one's very, very crucial. Rare earth metals are the backbone of the AI and semiconductor economy. And keeping that supply flowing means growth in the entire tech sector will not get choked off by a shortage of raw materials in the market. Now, aside from the concessions with China, Trump also struck a deal with South Korea. Seoul pledged to invest around $350 billion in the United States, including the purchase of over 100 Boeing aircraft, in exchange for a reduction in South Korean tariffs from 25 down to 15%. That's all really, really big, of course. But one of the biggest catalysts could actually be the end of the government effing shutdown. The government, man, shut down, man. Right now, the USA is stuck in political gridlock. When has it not been? Anyway, that's bad news because the government spending makes up a huge part of the GDP. When spending stalls, the money doesn't vanish. It just kind of sits idle in the Treasury General Account, or the TGA. Basically, the government's big old fat checking account that banks use for liquidity. When funds pile up there, liquidity tightens, which drags on risk assets like stocks and crypto. But once the shutdown ends, which could happen literally any day at this point, and every shutdown, of course, does end, all that parked cash gets released back into the system. Contractors start getting paid. Projects restart. Money starts flowing again. Banks can pull out billions because they'll need to. Probably hundreds of billions will be drained from the TGA within a week or two of it opening. That surge in liquidity could easily become the spark for the next leg up in markets, particularly because crypto is so reflexive to liquidity boosts. Now, before we get into the next part of this very critical conversation, guys, you will not believe this insane promotion right now from Femex, okay? You have to ask yourself the question, will you keep sitting on the sidelines, or are you going to take advantage of this insane offer? Look, I've been using Femex for years, and they've just launched one of the most generous cashback deals I've seen in crypto. Deposit $5,000, $500 back. $10,000, $1,000 back. Put in $20,000. They'll put $1,600 cash money back in your account. Plus, you can get up to $20,000 in trading bonuses as well. Deep liquidity, secure, they got all the coins you want, and global access from anywhere. You might need a VPN in some cases, but generally available to anyone, anywhere. This is crazy money on the table. Don't sleep on it. Click the link right down below before this offer disappears, and it is a limited time offer, okay? Now back to this conversation here, because look, on the flip side, there are still things that could wreck the setup because we have got crazy tailwinds right now for risk assets. But things like the bond yields, inflation data, or labor numbers keep coming in hot, yields could spike again, and that instantly hurts risk appetite. High yields tighten liquidity, they can hit tech valuations, and they can end up dragging everything back down. Second, we could have an earnings shock. The entire market right now is basically carried by a handful of mega cap tech stocks. If one of them, say Nvidia, misses its earnings target, that optimism in the market could evaporate real quick. It's a major risk. Third, geopolitical flare-ups, any escalation in the Middle East, or US-China tensions, or Ukraine, or any of this kind of stuff could send oil and defense prices higher, pushing inflation back up and stocks back down, tech stocks and stuff like that, which will hit crypto again harder. Finally, the government gridlock. If the shutdown drags on and money stays locked in the Treasury account for another month, it'd be the longest lockdown in history. If that were to happen, then liquidity would get squeezed big time, much more intense than it is right now. And markets hate that shit. A while ago, we looked at the century-old chart, but now let's zoom in a little bit. This one's showing a more recent ascending channel. And you can see how each major downturn lines up with big black swan events. The COVID pandemic, Ukraine, Trump's Liberation Day, liberating our portfolios for money, until he said bye, and then everyone got fucking rich again. Right now, the S&P 500 is pressing against the top of that channel and the 1.618 Fibonacci level. Now, we don't know yet whether it'll get rejected or whether we finally have an insane breakthrough here and the S&P 500 rages all the way up to the 3.618 Fibonacci line for the bull run of bull runs that no one is even close to being adequately bullish on enough on. But if it does break, the next fib resistance sits near 8,000, which is over 1,000 points higher than it currently is. That kind of breakout wouldn't just lift the S&P 500, it could ignite a new global super cycle, driving massive innovation, liquidity, and growth across markets. I know what you're thinking. Holy shit, he said the super cycle word. I know, dangerous, I get it. Some might even call this the melt-up phase, the last euphoric rally before the next great reset years down the road, because markets move in cycles. We have expansion, we have euphoria, we have correction, we have rebirth. It's all very, very normal. But if history rhymes, this could be the final expansion. When I say that, it means it's not going to last a few weeks. The final expansion could last a few years before the big crash comes, the one that defines the next decade for stocks, crypto, and really everything in between. You know what's awesome about all this? We've got front row seats. We are investors in this market. Every day we come out here and decide, are we staying in or are we cashing out? The only question is right now, are you participating or are you just watching from the sidelines? You already think it's mega bearish, everything is going to go to shit, and you're all in cash. Or are you staying in the market, continuing to deploy cash, waiting for higher prices? Okay, now before I go, real quick too, guys, if you're not signed up to our free newsletter yet, you should. It's awesome. It's free. We get crazy insights every single week. Prediction markets, trades of the day, news, altcoin alpha, stock reports, altcoin reports, and much, much more. The value is absolutely insane. There's the link down below. Go check it out. Thanks for watching.